Today we're talking about two really important topics, very timely in nature, both the coronavirus and its subsequent rate cut or impact to create the rate cut by the Fed. And this is really important because this could be the best time in history to rely on debt weapons and borrow your way to wealth while still attacking and getting out of debt. Welcome back to the channel, my cash flow kings and queens. It's your cash flow coach, Matthew here. This is the VIP Financial Ed YouTube channel. We talk all things banking and borrowing and how to create real wealth by maximizing your personal and business finances. And we do that by turning the banks against each other. We use a lot of cool tools and tricks for doing that. Make sure you're a subscriber to the channel. Push subscribe now and check out all of our other videos. These things, guys, literally life-changing. It's changed everything about my life, and I hope I can help do the same for you. It is true, guys. The Federal Reserve has cut rates, and they did so by a full 0.5 percentage point in an emergency move that was brought about by worldwide fears of the coronavirus. I want to know, what does it mean for you? So we're going to deep dive into that here on the video. The good news is this, that the lower rates mean lower borrowing costs, but the bad is that savers, as usual, will be penalized again and earn even less on their money. That should be a moot point for most of you here. If you follow any of the principles that we teach on the channel, you're not going to care much about savings. You want your money working for you. Now, why is this rate cut even coming about? I mean, late 2008 was the last time that the Fed cut rates by this large 0.5 percentage point. And we all know what was happening at that time. So does the rate cut mean that we're supposed to start panicking about the foreseeable financial future here in the US? In a meeting with reporters, Fed Chairman Jerome Powell recently said that the fundamentals of the US economy actually remain strong, but the spread of coronavirus has brought about new challenges and risks. And subsequently, Mark Hamrick, who's a senior economic analyst at bankrate.com, had this to say about the Fed rate cut. The full emergency 50 basis points reduction is the first since the financial crisis, which is a sign at how serious central bankers regard the downside risks to the economy. The Fed's most reliable ammunition, meaning lower rates, are dwindling. And Mark's right, guys. I mean, with interest rates being so low, historically low, the central bank is left with very little wiggle room now in the event of a recession. The Fed's benchmark funds rate will be targeted in the range of somewhere between 1 to 1.25%. So what is the Fed benchmark funds rate, and why is that important? Well, the federal funds rate is the interest rate that's used by banks and other depository institutions to lend money to each other. And that's something they typically will do overnight in order to maintain the percentage that's required by law that they have to keep of their customers' money on reserve. I recently asked MC Lobsher to join me and talk about this law in a previous video. So if you want more information about that, make sure you check out the link in the description and I'll put that video in there for you. Very interesting. But basically, the federal funds rate is used to control the supply of available funds, and that ends up controlling inflation and other interest rates. Raising the rate makes it more expensive to borrow, while lowering the rate obviously brings short-term interest rates down. For reference, 2 years ago, the federal funds rate was at 2.5%, and now it sits at between 1 and 1.25%. Now, obviously, lower interest rates provides opportunity for lower costs of borrowing, and that can certainly be a good thing in the short term. I mean, like I mentioned earlier, the downside here is that the Fed will have nearly nothing to work with in the event of a recession or even just another economic hiccup, like the one that's put in action here by coronavirus. This means that there will be little that they're able to do to reignite the economic flame in the event that it gets blown out. Which gets us to another point here. It's one that we've talked about often on the channel. It's really the one thing that holds most of us back from becoming our best and achieving our goals or our potential, and that's fear. I mean, fear is how we've gotten to the point where the Fed is even forced to put forth this rate cut. Well, we've seen how the media has talked about the coronavirus. I mean, heck, the name alone had it going viral online and on social media since day one. And the fear around coronavirus has been immense. But when you put it up against other pandemic situations that were taking place in even recent history, it doesn't look nearly as bad. I mean, I'm not going to get too far into this side of the conversation because Patrick Bet David, a friend of our channel, he recently dropped a video on the Valuetainment channel that really digs into this fear versus danger topic, and he does it perfectly as usual. So I'll leave a link for that in the description for you below as well. Make sure you check out that after this video. Now, until then, let's take a quick look at two really important questions together. Question number one, what can you do with this rate cut? For many Americans, the rate cut should make it easier for you to get into one or even several investment opportunities, real estate, businesses, etc. Since it's cheaper than ever to borrow, it may be a great time for you to be as strategic as possible with the types of investments that you choose to make. Guys, this is exactly why I am currently looking at a cash out refinance on a free and clear rental property where I'm looking to borrow $350,000 on a $485,000 valuation. Yes, it is free and clear. And as somebody that believes so much in being debt free and owning properties outright, why would I borrow against the free and clear property? Because the cost of borrowing is so low that I can now take that money and strategize with ways of substantially cutting back on our expenses, which I'm going to get into in a later video, and use a $185,000 portion of that $350,000 to invest in another income stream, which is a separate business from anything else we're doing, which now currently produces somewhere around $12,500 per month in net cash flow. So $185,000 with a $12,500 net cash flow monthly is a tremendous cap rate. Certainly much better than I could expect to do on almost any real estate investment I were to make. So I want people to be strategic here. I want you to think about how you can rely on these debt weapon tools like I'm doing with this cash out refinance. And that cash out refi will actually replace a current home equity line of credit debt weapon that I have. Both are mortgages, both are debt weapons, because both increase cash flow. So if you haven't yet thought through these situations and potential opportunities for yourself and for your family, I think now's the time. In fact, again, I think it's probably the best time in history to do that. The second question I want to address is, should you start now to panic about the implications that this rate cut may bring with it? No. I mean, yes, the recession, the next economic hiccup might be right around the corner. I mean, look at the stock market recently, for crying out loud. But panicking is never a good course of action. Plus, it's too early to tell whether or not the downsides to this rate cut are even going to happen. I mean, your best bet is to remain as strategic as you can and to look at how you might be able to leverage the opportunities that this gives birth to. The way you're going to do this is to get on the calendar for at least your free coaching session. We offer that to everybody here that visits our channel, as long as you have at least $500 per month in leftover cash flow to begin. We don't solicit. In fact, it's going to be quite the opposite. We don't sell. We're just here to provide you direction and offer you suggestions on what you need to be doing next in order to experience true real wealth for yourself as well. For those of you that are just absolutely sick and tired of where you're at, you're seeing month after month and year after year the same old results without any real changes, then take control. Get yourself some help. And that's exactly what we provide. We provide ongoing coaching. That's what we sell. You can claim a quick start vacancy and we'll sit next to you. We'll hold your hand. We work with you one-on-one. This is not group. This is individual, and you are provided a completely customized roadmap as you go in order to make the right decisions and truly optimize your finances. Guys, pick one of the options. I mean, yes, one costs money and the other one is free. If you're not doing either one, I'm here to tell you exactly what the problem is. It's you. So don't make yourself the problem. If you've been the problem, you can change it, and now's the time. So go to freecoachingcalendar.com, pick the preferred path, and let's get your financial circumstances to the next level as soon as possible. We're looking forward to working with you guys. I'm going to have the conversation with you myself personally, one way or the other. So I'm looking forward to getting on the phone with you. Until you get on that phone call, make sure you're checking out all the videos on this channel. The math will speak for itself. And if it's simply not a fit for us to work together, that's okay. We'll decide together when might be a better fit. Once we do work together, the costs of doing so are so worth it. It so far outweighs the tuition costs to get the returns and to get the results that we're able to do so by partnering. So I'm looking forward to our conversation, guys. And until then, please enjoy all of our videos here as a subscriber and make it a great day. Most importantly, stay healthy. We'll see you soon. Take care.